So these are the 4 economic reports that often move the market first. And I will walk you through what these mean, what they mean, and which currencies tend to win or lose strength when they shift. All right, the first one is the ISM Purchasing Managers Index, known as the PMI as well. So that measures how healthy the manufacturing sector is. So if we have a PMI above 50, it means that the economy is doing great and it's expanding. All right, that's usually good for the US dollar because it signals growth and it tends to hurt the safe havens like the Swiss franc. All right, but when it drops below 50, it's a very, very big red flag for slowing activity into the economy. And in this case, the US dollar often loses value and money flows into safe havens that put pressure on growth currencies like the Australian dollar and the New Zealand dollar. The second one, LEI, is the leading economic indicator. So think this as an economic dashboard, pretty much. It combines all the forward-looking states like orders, building permits, jobless claims, So when the LEI climbs, it's a vote of confidence in growth, and currencies like the Australian dollar, the New Zealand, and the Canadian dollar, they often rally, while the yen and the Swiss franc, they lag behind. So if it will fall very sharp, okay, and that will put a lot of pressure on the risk on currencies. Now, the third one is the yield curve. So the yield curve is very simple. It shows the difference between the short-term and the long-term interest rates. A normal steep curve says growth ahead, which boosts risk appetite and tends to lift the US dollar, the Aussie dollar, and the Canadian dollar. But if the inverse happens, so if the curve inverts, meaning that the short-term rates rise above the long-term rates, it's often a recession warning. So if the short-term is 2, if the short-term yield is 2 and the long-term is 4, then we may have a recession coming. All right, and the growth currencies will take a hit. The last but not least is the consumer sentiment. So this tells us how confident the shoppers like me, you, your family are feeling about spending the money. So if the sentiment's high, spending rises as normal, and that's a positive risk for currencies like the Australian dollar, the Kiwi, and the Canadian dollar. But if it happens the opposite, if the confidence collapse, the spending will slow and the risk appetite will flip, and then the safe havens like the yen, the Swiss franc, we usually surge on those scenarios. So price action is actually the last chapter in the story. These reports are the opening ones that you need to pay attention. So learn to read them early and you won't just follow the market, but you will get ahead of it.